All right, we are back for our Fractional Friday. So, good morning, everyone. I got Joseph Kachapali here, and we got Harrison, Trade Better 99, joining us this morning. So, morning, fellas.
Good morning.
Morning.
Yeah, so Harrison is part of the Discord. He's joined Joseph's Discord channel. I'm also a part of it, but Harrison is much more active there than I am. But Joseph, I think Harrison might have some questions for you, or how did you guys want to start for this Friday?
We could start with that, and then if we have time at the end, talk about the other thing. So I think that's
Okay.
good.
Sure. I mean, yeah, my questions are pretty quick. I guess the biggest part I was wondering about was I went really deep into the weeds with Lofty. It's been an interesting platform you've talked about on your channel that I've been watching everything on. Because I have a little insight on, I mean, investing in Ohio and especially there's properties there. Numbers never made sense, and then as you were talking about in your channel as well, people are losing money here, and I'm wondering if you're noticing like maybe there's double fees, or I think there was just something that, and then there's influencers that from a while back, yeah, so that we're kind of saying the same thing.
Yeah. So I think that what really happened, especially so when Lofty gets started, I think they have one fundamental problem. They don't have somebody on their team that knows anything about real estate. And I mean that's like an overstatement, but like they don't have anybody who has experience investing in real estate. And so and they're not really even trying to judge the properties, right? They're like, "Oh, it's just a, it's kind of like they call themselves the Nasdaq of real estate, but I think the eBay of real estate is a better comparison. Like anybody can put a property on there and then and then they're like, okay, somebody put it up, you can buy it. Their original most of their older properties were I mean just nobody should have ever bought those at the prices they were brought to the platforms on. A lot of them were all from like one turnkey home provider who, I don't know if you're familiar too much with turnkey home providers, but they're never, I mean, you're never getting a deal from them, right? Like
Right.
they're typically targeting novice investors who have like no real idea of what they're buying. And I mean, I don't know, I've very rarely run into one that is, selling you what I would consider a good investment property, right? Like, okay, if you're going to park some money in real estate and you're going to hold it forever, and maybe you're going to do all right, but it's not like where you're spending the time doing the work, finding good deals like that. That's not it, right? Like it's somebody. So that's why they just have this really like all their what they call legacy properties. Um, Literally, there's not one that I would buy into without getting at least a 40% discount from what they originally brought it to the platform for. But right now, I'm getting 60 to 80% discounts on a lot of those. And so I am buying a lot of them. Like, so for example, one that I have, uh, well, it's really in St. Louis, I guess, but I'm buying up a bunch of one of them that is, brought to the platform for $50, right? Which implies like let's just say it's $100,000 purchase price, which is pretty close. It's actually a little bit different, but that makes the math
Right.
easier. But I'm buying those tokens for $18. So it's like I'm buying that property for $36,000. Now, there is like some unpaid bills and whatnot that you have to add to that. Like on that particular one, it's like another 13,000. But okay, I'm buying into $100,000 property for 40,000 bucks at the end of the day, right? So that's why there's opportunity, but that opportunity only exists because somebody bought it for 100 and it hasn't been performing, so they're stuck selling it for 36. So
Right. Yeah, and I guess that's where I was kind of seeing those kind of returns are better because I felt like when I was going to buy a property, I felt like I was being charged a 2% fee, or I forget what it was, something kind of exorbitant. And then it was like, okay, is this a realtor fee or sort of something? And
oh,
then
it's
when
even
you're
worse.
selling, oh yeah,
Yeah, no,
oh
when you
there's that
buy
to it.
on there,
Yeah,
you're paying, and their fees, they just now finally changed their UI to make it a little bit more understandable. You pay if you buy it through their automated market maker, meaning like you're buying it instantly.
Right.
You pay a 3.5% fee that's for lofty. You pay, I want to say, it's either I think you pay 2% fee to the liquidity pool, which that's the pool that actually makes it possible.
Right.
And then you pay another, I think, 2.5%. It ends up being 8.5 total. So whatever gets you yeah, 8.5 on the
Wow.
purchase to buy out of that pool. But then so either like 2 or 2.5 of it goes into the operating reserve. So you're making an operating reserve contribution, which, okay, that sounds great, except that, like, why isn't the property just generating its own because they
Right.
fund one up front, but they don't replenish it except for through trading often, most of them. But if you go and sell, you don't get your percentage of your operating reserve back either. So it really acts like a fee if you
Right.
buy and sell instead of buy and then sell the property in real life.
Right. Okay, that
Um,
makes sense.
and then when you sell, you're again paying. You don't pay the operating reserve again, but you're paying about 5.5% on the sale
Right.
between the lofty fee and the AMM fee. So
Oh,
yeah, so
yeah.
you have to between that purchase and sale, like, to make a profit, you have to have over almost a 15% total return from your purchase price to your sale price. Um, it's like 14 and change that you have to make,
Right. Oh,
which sounds insane, right? But
it does.
at the same time, sometimes I buy and sell a token the same day and make a profit because the prices can move that much. So it's very not a real estate, dynamic when you look at the prices of tokens sometimes.
Right.
And so that's why people are losing money, but it's also, I mean, that's one of the reasons why, but it's also why there's huge opportunity, right? Like I bought 2 days ago, I bought tokens and sold them within an hour and made a 10% return after all fees within an hour,
Wow.
and you can't do,
Wow.
it wasn't hundreds of tokens or anything, but it's, and that's the other problem is as you buy more or sell more, you move the price a lot. And so it's a really fun platform to make huge percent returns on small amounts of money. But as you start to scale up the amount of money you put on there, it's much harder to really make those outsized returns.
Okay. Oh, yeah. I guess that's where I'm going through the mindset because I'm thinking of there's it's almost in this in between spot between stock trading and real estate buying, and it's I guess
Yep.
the fee structure just almost feels just a little too much, and then I guess pulling it out, and then you were talking about how you put it in Coinbase. Is there a way to just like I don't know? I'm trying to think of
Oh, to
how to
get
keep DeFi and everything. Yeah.
to put money on and off. This is
Yeah.
one of the things, and I'm not a crypto guy at all. Like I
Right.
got
Right. No.
into this not even understanding that fractional real estate was, using the blockchain. Initially, it was not what I was looking at all.
Right.
And not all the fractional real estate platforms do use it, but yeah, I just put money on Coinbase now and then just send it to my Lofty wallet. It's the easiest way to fund it without having to pay. Well, and honestly, it's not the fees. I mean, you can fund your Lofty wallet without fees, but it takes forever. Like I do an
Yeah.
ACH, and it'll be like a week or 10 days before the money hits my account. Where if
Jeez.
you just use Coinbase and send it to your wallet, but you have to be careful because like someone like me can easily just disappear to $1,000 trying to send it, and it's not the right type of crypto, because it's
Yeah.
USDC, not like there's different types of
Right.
USDC. So yeah, that's the part I don't enjoy that at all. Like I know that's why a lot of people are there. They're like it's mostly crypto degenerates that are moving
Right.
into the real estate space. Um, I think that they take that as a compliment. I don't think that's
Right.
derogatory at all. So
Uh, all right. So I think Joseph, you had a couple of videos that you had a video that came out, and I think Mogul is one of the platforms that you like to talk about quite a bit. Um, but there's also another one that you kind of want to dig into a little bit today, right?
yeah, one that I wanted to mention, and I probably should have started with it, is Arrived Homes. They are they're the biggest as far as I know. They have, and I think that they're kind of the standard that most people want to compare others to. I was looking at their site today. It says they have 470 something homes. Last time I actually was on one of their webinars, I think they have over 500 that they've listed. Um, but they're, and I actually have their tabs up if you want me to share, just to show you a couple things about it.
Yeah,
Um,
whatever's man.
yeah, let me do that. Let's see.
Thanks everyone for tuning in after the school call with Thatch Gwyn. And I think everyone's popping in now.
Yeah.
But here we go.
All right, so I've got the arrived home tab up. Can you see that?
Mm-hmm.
Okay, great.
Yep.
So this is their platform. They have. So I want to mention a few things about them that like sort of make them why they what I think they're basically what I would say is like the gold standard in a lot of people's minds. So they're not crypto based. They are actually creating securities for every single property and selling securities through a registered broker dealer. So a lot of people that are interested in, the safety aspect of things and don't want to take any regulatory risk, they like it from that perspective. Um, if you think about volume, these properties, they put out properties. They've been doing it for 3 or 4 years, I think, maybe even a little longer. There's always properties out. They've started to uh, put these like they have their like private credit fund, their Seattle fund. So they've started to create these funds that you can invest in. I think that starts to get away from being fractional real estate because now it's very similar to investing in a REIT or a fund, and you're not picking individual properties. But other than that, you are buying. You can see you do all the same due diligence that I'm doing on every other platform. Um, they like to talk about that they're like a Jeff Bezos backed company, uh, which I think makes people feel safe. Again, so they focus a lot on the safety, on wealth, on like the long term wealth building. Can you see the tab with the map up, or am I still on the first one?
Yeah. You've seen the map.
Okay, cool. And so you can see they're really all over the country. Um, if you look at their average properties, they're buying like relatively new properties. Some of them even brand new construction, but a lot of them, um, a lot of them are just a couple years old or whatnot. Yeah, like here's a 2022 one, and this is just coming up now. So this is, I think, a lot of people, when you talk about fractional real estate, this is one company that most people have heard of, if they've heard of any of them. And so all that being said, you might wonder like, well, okay, why this is not one that I invest in, or you don't, I've done probably 3 videos about it, and the number one video I've done about this is why I don't invest in arrived homes. Um, and this is the reason right here, right? I'm going to show you their financials tab. So if you go to any one of their properties, and you look at, you click on their financials tab, and you look at, this is their annualized total returns. And basically what they're saying is like, okay, I'm getting 4.5% appreciation a year. And with that, I'm expected to make 6.5% total returns over the life of holding this. Um, to me, that's a depressing number, right? Like,
Yeah.
even if this is, like if you even if you think it's okay, one of the safest fractional real estate platforms, when you compare it to uh other safe investments that you could be making, it's just not, like if I wanted to buy just a stock market index fund, right? I'm on average going to expect better than 6.5%, and I'm not going to have to buy something that is still, even regardless of how safe you think it is still a new product in the marketplace that's untested. um the reason I think that their deals are all like this, and this is like every single one of their deals, I mean, they're just all, I mean, if you start to make some ridiculous assumptions, then maybe they make money. But the reason it's so expensive is because they're creating, um they're creating securities, and so and you selling them through a broker dealer. So there's this like huge expense associated with that, that is it's that is making each individual property add this very large layer of expense that just nerfs your returns. That's one problem. The other
Yeah.
problem is they don't seem to really spend a lot of time picking great deals, right? They're trying to pick, they've picked markets, right? Like you can see they're I mean, they do have some in markets that I don't love, but for the most part, I think they're focusing on markets that you'd expect to do well in the long run. You can see they don't have anything in Pittsburgh, so we're good there. Um,
Whoa, hold on, man. Yeah, I
um,
like it that way though. Stay out of there.
yeah, but no, you know why they don't? I mean, more than anything, Pittsburgh doesn't have a lot of new construction, right? And so they're
Right.
they're
Yeah,
they're
that's
trying
true.
to avoid that. The new construction does help you avoid a lot of the capex expenses and whatnot going forward. But no, I mean they focus very much just on growing markets and whatnot. I did watch that video you did the other day with I don't remember his first name, but with Deacon. Uh,
Well,
Oh,
Alex, yeah,
Alex.
Alex, yeah,
yeah,
where he mentioned, where he's like, yeah, this is not a. I love that guy. I think he's like super clear. He's like kind of. I feel like he talks about his market the same way I talk about mine. Like he's like, yeah, this is a good cash flow market. I don't think it, long term. I'm not expecting anything out of it. He's like, go to Texas, right? If you're looking for a market, and I do the same thing when people come here because I'm in San Antonio. I'm like, yeah, if you're looking to get access to this growing market, this is the way to go. If you're looking for great day one cash flow, go. I tell people all the time, go to different places in the Rust Belt. So,
yeah.
um,
I love Alex. I think he wants a cooler name. Though. I don't think he likes me calling him Yoda because I say
yeah,
he's like my Yoda of
yeah.
but I think he
I
wants a
noticed that
cooler.
he didn't seem to like that very much, but no, I thought his take on that market is right. Like, and that's one of the things I always love when you run into people that are just like in this industry and completely honest about what they do and don't have to offer, right? And I think that type of really being upfront about stuff isn't great, or isn't everywhere. I mean, it's great when you do run into it. But yeah, so I think Arrive talks a lot about, okay, we're picking these markets. We expect to, if you look at what they're doing, they're saying, hey, most of your money is going to come from appreciation, right? I mean, they're paying, it's very low, 4.4% annual cash flow is what they're projecting. And on all these, frankly, they haven't actually hit their cash flow projections on a lot of them. Some of them they have, obviously, but so it's weird because I think I know a lot of people that are invested in Arrived, and like when they compare it to Lofty, they're doing better, even though they're low returns, because at least they haven't lost money, right? Because like we talked about, a
Right.
lot of the early investors on Lofty have lost significant capital. But at the same time, like when you compare them to Mogul, if you look at like the average deal, ignoring everything, right? Like not thinking about the fees, not thinking about, okay, having to pay for this different structure. If you just compare one property to the other, your cash on cash return on the average property on Mogul is probably close to double what it is on Arrived, because they're spending a lot of time, picking great properties. Now, the people that would say, well, I'm going to be on Arrived instead of Mogul, they're going to say, it's because I want to be inside a security, right? I want that SEC oversight
Right.
of this product. I think it provides additional safety. I'm not taking any regulatory risk. And I think for somebody that might be the right answer. For me, it's not it's not an exciting answer.
We do have some questions while you're looking at some stuff. Joseph
Yeah,
Flavio.
happy to answer anything that I can.
Yeah, Flavio just says, which platform do you trust the most?
I mean, trust is an interesting word. I don't trust anybody,
Yeah.
ever. And that's why like all of my videos are like, do your own due diligence, dig into this. So if I had to pick one platform and I was going to invest my net worth on it, and I would never recommend doing that, right? Like definitely spread your money out across several if you can. But if I had to pick one right now, it would definitely be Mogul. I think the guys they just and I mentioned this the other day. I feel like I'm way too much of a fanboy for them right now, but they pick what I think are great deals. Their average deal is so much better than than the typical deal that you see on any other platform right now.
I think you were saying too, right, that you feel like they were more real estate guys first and
Yes,
are bringing this platform, yeah,
a
consider
hundred percent, a
instead of
hundred percent.
backwards of crypto guys or whatever, and then or tech guys, and then trying to make a real estate thing.
Right. And it's exactly the opposite of like, a lot of these platforms they'll have gone out and hired like a real estate guy, and it'll be, they went and hired a commercial real estate guy, or somebody who doesn't invest in residential investment properties. And it'll be like, okay, they got somebody, he had a good resume, he's has, a lot of money worth of deals, but he's not ever used to looking at, what type of business plans you're using with a single family
Right.
home. And then some of them, like Lofty, like literally, as far as I can tell, doesn't have somebody who has, even a couple. Whenever I end up picking on them a lot lately. Um, I still have money on there. I'm still doing well, but I think that just like the fundament, I think they believe they don't need to know about real estate because they're like, well, we're just a marketplace. Anybody can bring it on there, and so it's up to you guys to figure it out. But I
They also
think
have
that
that Chamath money.
right,
Yeah.
yeah.
So it's just, I feel like that, yeah, they have that. I was going to say that larger than life mentality. So,
Yeah, well, and
um,
that's something we had an interesting call with them. And that's one thing, they're accessible, right? Those guys are, they talk to us in the Discord. They're doing like these monthly town hall videos now, which they weren't before. But but like yesterday, he just randomly jumped in the Discord's live voice hangout and answered questions for like an hour and a half. Um, and so I like they're accessible like that. But like, one of the things that he talked about is, they are VC backed. Like they need to have, it needs to be $1 billion business. It's not about, and you're not going to get there by you going out and picking individual deals. Like them as a company, they're not going to be able to scale that up. But as a marketplace, you know, they're them just providing the technology, and anybody who wants to bringing deals on should allow like much greater and faster scale. And I think that it would be true if I think that what they're missing is like just some guardrails that like, I mean, there's just like rampant, and I don't know if it's actual fraud, but it looks a lot like fraud happening there, where you have people doing all kinds of just weird stuff with properties, as managers of them, because all those properties on that platform have a third party manager. Um, and some of them have deeded the properties over to themselves. Some of them have missed tax payments on large numbers of properties, so it looks like that's not an oversight, especially when they recorded that a tax payment was made. Some of them have sometimes they bring a property to the platform and they've promised to have these like basically supplemental rent credits, and have come back and said, oh well, we can't really afford to pay those. So like you have all these basically bad actors, and sometimes I think some of them are intentional and some of them are the people just really didn't know what they're doing and didn't fully understand what they agreed to when they brought properties to the platform. I think both of those things have happened. um but it's like if you when your average deal has lost 29% or something, which is their average token prices, about a 29% decline from where they started, um, they have problems. And I think they really need a real estate person that's like putting some guardrails on the types of deals that can get onboarded. But they just seem to really want to be like, no, we'll let you put whatever you want on. And that's their mentality. So it gets really difficult for sort of a novice investor to get on there and really figure out, okay, what should I buy and what shouldn't I?
Yeah, and Flavio's asking, so like the owners of these properties, are these like syndications typically?
On when we say these properties, on Arrived or on Lofty or on which platform?
I would say he's maybe asking for fractional real estate in
Yeah.
general.
So none of them are syndicate. I mean, they act similar to a syndication. None of them are syndications, right? Like they're all so like on Arrived, the home is actually there's no sponsor, right? Arrive does, if you had to think about like who acts as the sponsor, it would be Arrive to the company in that scenario. But the property is actually you're buying a security, you're buying an interest in the LLC. So in that way, it's somewhat similar, but you don't have this LPGP structure. um, with Lofty, there's none. I mean, so there's some of the properties get brought to the platform and they call it their co-ownership model. So the person who actually brings it on there, they're required to maintain a certain percent ownership, and so they're selling out the other equity. But even in that scenario, it's not like a syndication in that. Well, a couple of things. One, it's not that we're pooling money and we're going to buy stuff. In that scenario, that co-owner owns the property and they're bringing it there and selling out equity. But the other big difference is they don't have the control that a syndicator does. Once they've started to sell out equity, every big decision has to be made with a vote of all the owners. So, like if when I invest in a syndication, I'm a limited partner. I give them my money and I just wait, right? Like there's nothing I can do. If I'm invested on Lofty and I don't like the direction of things, I can propose a vote to change the manager, to change the business model, to sell the property in real life. So I have a lot more control than I would in a syndication on there. Mogul is also, none of them are a true syndication. I think Mogul probably behaves more similarly to one than any other platform. If you thought of Mogul as the sponsor, they're going out finding these deals. We're investing in, during that uh, escrow phase, right? It's under contract. That's when they start to raise capital. I think that's the one that looks the most like a syndication. They're really making most of the decisions. Excuse me. Although they do give us the ability to, when it's time to refinance or when it's time to sell, there will be voting in that platform as well. So you get a little bit more control. But I think that's the one. If you had to like pick one that really looked a lot like a syndication, it would be that. But none of them are a truly syndication model, at least not that I've covered yet.
And he also asks, in Mogul, is the money in long term, or can you sell at any time?
Currently, Mogul doesn't have a secondary liquidity option. So there's no, once you buy it, you are an owner until that property sells in real life. They have like their product roadmap that they talk about where they have different things that are upcoming, and they expect sometime next year to have some way to sell your ownership stake. Um, Obviously that's not guaranteed, but they have been really good at executing on the things that they say they're going to do. So I trust that they'll have it. Maybe the timeline of it might be difficult because I think it's probably a matter of making sure they're okay from a regulatory perspective to allow the sales of it. But yeah, at the moment, if you anything I buy on there, I'm expecting that money to be in there until the property sells in real life. But with the caveat that they have mentioned that you should be able to sometime next year sell out. Now, one of the things that they've mentioned that I think is going to be different is it's not going to be so like on Lofty. It's really like market trading. The price fluctuates. You can buy low, sell high, like get in there on a daily basis, and that's why I have a lot of fun on that platform. Mogul seems to have indicated that what they're going to do is they're going to say this is what they sell for. If you want to sell them, you can, and they'll basically have a liquidity provider that'll be there buying them. And then I think they'll probably resell those to people who want to own them. Uh, I think there's good and bad about that. I think the good is you won't have this average, 30% loss that you're seeing on Lofty, right? Like you'll have something that's based more on the value of the property, unless the real estate market tanks, right? And then you could have that average loss like that. Um, but it is but the downside is you're not going to be able to have fun and get in there and trade daily and pick up super cheap shares every once in a while.
So Josh, who was just on Kauai, he left for a red eye last night. He said he wants to know more about this. He did subscribe to your channel. I told him you're doing daily content on fractional real estate, but he does have a question. He says, once you buy into a specific property, do you communicate with the other owners on that property?
So on Lofty, you do. They have a Discord set up. There's separate Discord channel for each property. And so I spend way too much time on there talking to people about it. I even go, I read every single post in there on the deals that I don't buy or that I'm not invested in yet. And this is how I find ones. This is just it's an aside, but I'm going to tell this story because I think it's super. It's a really interesting like why. So 2 days ago, I was, one of the discords popped up, and the manager of that property was like, "Hey, we got our estimated proceeds from our insurance, right?" And I was like, "Oh, what's happening here?" The property had been struck by lightning a couple weeks back. Um, it's basically a total loss. They're getting a huge insurance check that is going to be that's at the time the token was trading for about $32 a token. The insurance proceeds end up being about $42 a token. And that's not even including that, okay, we're going to be able to sell the property. Now, maybe you have to pay to demo it first and then just, and sell the land. But even so, let's assume that's a wash. There's $10 to be made per token. So I jumped in, bought some tokens right away, and then went and asked, started asking questions. And then by that time, uh, other people had bought the tokens and bid the price up. But um, I spend a lot of time in there talking to other owners, reading this stuff because that's how you find these opportunities. I mean, you think that's not something you'd ever see. You're never going to buy a property after it's been hit by lightning and get the benefit of the insurance so it creates all these weird scenarios because you can basically like go back in time and like I'm buying it at the price that it was before they knew the answer, and as soon as as soon as you know what's going on. But yeah, I talk to the other owners on there all the time. Mogul has created these clubs that is basically like you can join and talk to other people in the club, and so there's some discussion about properties, but it's not nearly the same way, and it's not directed the same way. And then, as far as I can tell, Arrive doesn't have anything like that. Landa, which is another one of these platforms, a lot of people have invested in. They have a Discord. Um, but I mean, I think that mostly people are just talking about how can I get out of this platform on there. Saul's Lot recently put up a Discord, in the last few months, and that's been super active. So, on some of them, there's a lot of ability to talk to others, and some, not so much. But at the moment, I think, even though they're just using a Discord, I think Lofty is the one that has really the most robust community. I mean, there's, all day, every day, there are people in there talking about one property or another.
Shoot, where did you? Yeah, I remember seeing that picture. Where did you post? I was gonna try to share. Was it on X? The lightning
Oh
strike?
yeah, yeah. I put that on X.
Oh shit, I
Um,
can't find it. I'll try to look for it next time. Yeah, I saw that. I meant to ask you about that. I completely forgot. Let's see. Yeah, Flavio's making trouble. Oh, you know one thing I was it
y-
Mogul or Loft? Was there one, or can you do this on all the platforms? So like if you you can put your own property right on there. Can
on
you?
Lofty is the only one right now. Lofty and there's this other one called Fractional App are the only two that I
Okay.
know of that you can bring a property to, not as part, not being part of the platform.
So Lofty must be the one, right? So you can also like sell equity, right? Is that
Right,
the deal?
exactly.
Okay.
Right. Right.
So if I had a property that let's say I have a great mortgage, right? I don't want to have to get refinance because I've got a real low mortgage rate, and I don't mind giving up a little control. Like the chance that I'm going to get outvoted on decisions. Like those are the things I have to really worry about. I can bring a property to the platform. They basically move it into this DAO LLC, which is the special structure that they need to be on there, and then I get all the equity tokens and I can sell them on there. Um, they let you list it at up to a 5% premium over your appraised value, so they have you get an appraisal when you bring it on there. Um, and then yeah, and you can you can charge a management fee if you're the one that's continuing to manage it. It's a way. It's definitely a way to tap into equity. I don't know that it's cheap, because even though you're selling at a premium, typically the new properties to the platform have a really high stated yield, and a lot of that comes from the way that that the people bringing the property structure it, right? So like a lot of times they'll say, okay, I'm going to sell the equity, the entity is going to benefit from the cash flow, but I'm going to pay the mortgage outside of that, right? And so sometimes, or they'll say, or I'm going to provide a rent credit so that so the P&L looks much stronger than it really is. And by doing either of those two things, it lets them sell out of, yeah, that's the property.
That's
uh
crazy.
Yeah, I found it.
yeah, I
There it
mean,
is, the lightning
there's
strike.
there's a ton of, like, this property was horrible. And but this is actually really good. So this is an example one of how you can make money by paying attention on there. But the other, this property got struck by lightning a while ago, and we only knew because we sent somebody out to do like, they couldn't get into the lockbox, and so they went out and changed out the lockbox, and there was like a note from the vendor like, yeah, and I think your place might have been on fire or something. Like, it was like, we didn't know about it the day it happened or anything. So that was but it wasn't one that I was invested in at the time either. But it is some of the worst aspects of out of state investing, like where you're not really in control. So especially on Lofty, because it is all different people bringing properties to the platform and different managers and whatnot, it's really important to pick ones that have a manager that you trust and that is active in the discords. You can talk to them and get info in real time, and that is actually hands on looking at the property too. I mean, some of these uh, will have no updates for 3 or 4 months, and then the co-owner, the person who brought it on, will just show up and be like, "Oh yeah, I was supposed to be telling you guys about this. Well, I actually have it listed for sale in real life." And they're not supposed to do that without having voted on it, right? Like, they can't just sell the property and whatnot. So, um, yeah, it is somewhat of a circus sometimes.
All right, I'm trying to figure out how to get this damn thing off. I did something here that. All right, you guys can keep talking as I try to figure this out. All right, how do I take this thing off?
But yeah, Flavia brings up a good point. Is the property you feel that you will lose money? I would say in Lofty, I always felt like there was a lot more due diligence needed, because there's times that I felt like this is I, how do they justify these prices, or how are they
Right.
justifying these management fees, or I mean, even some you can actually go look and say, is this even being rented out? There's one property I double checked, and it's like, this property is just sitting there.
Right.
So
No, you 100% have to do all your own due diligence. Don't trust what the site says. Like, actually, I'm always looking on third party sites like Zillow and AirDNA if it's a Airbnb. But yeah, you have to do your own due diligence. And one of the things that I've recently noticed, and I didn't pick up on this early on, is one of the things that there's a lot of these properties that are just like stupid floor plans. And because nobody's ever walking into that property when they pick it out, like, it's hard to know that when you're looking at it on Lofty, if the pictures that they've provided, like, unless you get a video walkthrough, it's hard to know. So like, there's one property, it's been listed as a 4.2 the whole time it's on the platform. uh, it has severely underperformed. I'm actually buying it because it's just super cheap. For but if anybody who is a normal person who walked in that home would call it a 2-bedroom home, because two of the bedrooms are what they are calling like walk through bedrooms. Like, you have to walk through them to get into the other bedrooms. What they did, I think, is took like, it was like a two studios in a duplex, like in a property that I don't think was ever zoned for duplexes, and they're like, "Oh, we need to convert it to a single family home," and they just like poked one hole in a wall and made this weird like horseshoe floor plan. So if you don't, if you know, if I hadn't found the video of the guy who had done a walkthrough of it, which is like buried in on that listing page in like the updates, I wouldn't have known why that. There's people that have been invested in that property for 3 or 4 or 3 years, whatever, since the beginning, that had no idea why it wasn't doing well. They kept trying to blame the property manager. What's weird though in that sense is the property manager, I guess they just assume we know, right? Like they never came out and said, this is just the weirdest property ever. You're never going to get, because people kept trying to get the rents that as if it's a 4.2, but it's
Right.
not really a 4.2, even though I guess in that market you can call those bedrooms, but like here, we'd never try to call that a bedroom. I mean, it's just completely ridiculous. So,
Wow.
All right, figured it out. Got us back on regular camera.
nice.
Never again. I'm going to try to do something in the middle of the stream. But all right, we're back. Yeah. Anything else you want to share on our arrive, or anything else you want to discuss? Or
Um,
I saw you hit 500 subscribers on your
Oh,
channel.
I did. Yeah, I'm at 540 now. So yeah, that's been
Nice.
moving
Yeah.
along pretty nice. I am, it is like it's been super fun to do that. I'm trying to put out something every day. Uh, it is like one of the things. It's so hard. I feel like I'm just beating up on Lofty all the time lately because all the good stuff to talk about is just stuff that's going wrong on that platform. I do whenever I'm, when I, and it's tough because like I have had some really good exits on there. I've had some properties where, in 30 or 60 or 90 days, I've made a 45% or higher return. Like I've had a couple of those where, you buy the property um, on as tokens, we list it, we sell it in real life because it was discounted. You get this huge pop. And so like there are these opportunities to get really good returns. But it is like I start to worry about like sending new people. I think if you watch and you're a brand new person, you're probably not going to go, oh, let me go there.
No.
At the same time, I do make the best returns there, but I think it comes from spending a lot of time in the Discord, looking for
Right.
those deals, jumping on things like this lightning strike, right? Like, I mean, that's a weird opportunity. Um, but if you're quick, you can basically you can front run these deals, right? Like you can get in, figure out, okay, we just got this news on this property. What's that going to do to the token price? Let me go buy some today if it makes sense. Or let me sell some that I have before everybody panics. So
Right. Yeah. I guess I find it interesting too that you're probably the number one channel that has all the Lofty news as well. I would say Lofty posts some stuff here, but you're like the poster
so
for
it's
them.
very strange if you search fractional real estate investing on YouTube. There's like a lot of different people who've done a video or two about it, but
Right.
there's really nobody talking about the industry. I think there's a reason for that. So I think there are, um, for me, so one, I've worked in residential investment real estate for quite a while, and I think it's a niche that like not everybody's in. But I was getting ready to wind my team down next year, like be pretty much done, try to just focus on my own investments when I came across it. So I don't have I think a lot of the industry people have this like, uh, it's not to their advantage for their clients to be like, hey, let me go buy fractional real estate instead of buying out of state properties with you, or instead of buying, instead of whatever they're doing. I think there's a huge opportunity in fractional real estate. I think a lot of new investors, it's going to be how people start off. Um, but I think that a lot of the sort of bigger guys in the real estate investing space don't really want to acknowledge that yet. Like it's not
Right.
so big that it's like, okay, it's definitely happening. And so I think it's not really worthwhile for a lot of them to talk about it because yeah, I mean there's not a course for them to sell on it. There's not services they can provide around it. But yeah, it is weird that the platforms themselves don't do more,
Yeah.
media about it. And some of them have done a decent number of little interviews and whatnot. But yeah, I mean, it is, um, every time I try to like search it on YouTube to find other people talking about it, it's shocking to me how little, because I think this is going to be a ridiculously big industry if we can like figure out, there's not a model out there yet that's a perfect model, right? Like
No.
so far my favorite is Mogul. I think they are operating in this like regulatory safe harbor that they're comfortable with, but I think that there's some chance that in the future, the SEC or someone comes to them and says, "Nope, you can't do it this way. You got to change." And that'll change the expense structure a bunch. If they were forced to do the arrived home model, they'd still probably be the best option out there, but they'd be, that would eat into the profits considerably. So yeah, it is really
Um,
strange that there's not more out there about all of this stuff.
I believe we have Alex Van Beek tuning in
Hey,
from Joseph's channel. So he's asking, how do I hop in? I'm not sure if he means hop into the live or hop into fractional real estate.
no, he knows how to be in fractional real estate for sure. Yeah, so this is actually his name is Whalick. He's a whale on Lofty, even
Okay.
though it looks like it's just Alec. He's somebody. If you want to interview somebody else who's like really into this space, he's a co-owner on Lofty. He's brought a couple of properties on there. He has a couple of the only. I only have maybe 5 or 6 properties where I've paid $50 or more. Like I think there's actually, money to be made there. He's got 2 of them that I've bought. So I think he's a good operator, and he just recently took over management of, I want to say 50 properties on that platform from one of these people who I was talking about, who's sort of like a one of the bad actors that's doing all sorts of stuff that looks a whole lot like fraud. I don't ever like to say that's what's happening. It could be
right.
the guy just has no idea what he's doing. Like a lot of times, negligence and fraud from an outside perspective, it's tough to tell the difference, right? Um, but yeah, Alec has come in. He's taken over a bunch of those. He's dealing with that mess, which is a real mess. Yeah, it'd be fun to get him on here at some point.
Well, Alec, you are pairing from Joseph's channel, but if you can hear me, I probably only got maybe 10 to 15 minutes left today for be able to live. If you do want to jump on, you can put your email in Joseph's chat or come to my channel or send us your email if you want to hop on for maybe 5 to 10 minutes and talk about Lofty, then go right ahead, man. But yeah, I only got about maybe 10 to 15 more minutes, but if not, we can always get you on another one.
Yeah. Joseph, you definitely do bring up a good point because I feel like without the SEC backing it, and I mean, then you have the other companies like Fundrise and CrowdStreet and everything, and that's where I think that's the legitimate folks go.
So all of those companies started off as these, back when they called it crowdfunding, and
Right.
and all of them started off very similar to what I'd say is fractional real estate right now. It is, but over time they realized, okay, there were too many hurdles, and so they all turned into REITs. Fundrise is just a private REIT, right? And
Right.
the reason I like fractional real estate more than REITs, uh, is that, it's you get to actually do your due diligence on an individual property, not do it, try to understand like this whole structure, like, okay, there's 100 properties in this, what's it actually worth? um
Do you have his email by any chance, Joseph?
I
Or
don't have his email.
okay,
I know I'm a very horrible multitasker too.
no,
Like
no.
I cannot do 2 things at once. I don't even like to talk to people when I'm driving. Like I'm a fantastic unitasker, if that's a word. Um,
Yeah.
and I even forgot what. Oh, okay. So I noticed Flavio posted like, so I'm not investing in physical real estate. Um, what do you think that if that? So not I haven't bought a new property in the 9 months that I have been investing in fractional. I had been investing in real properties since 2005. Over the last several years, though, I had converted a lot of the properties I had already to, I had sold them and was just holding owner financing. I was mostly just
Mhm.
trying to become a note investor because I was looking for something more passive. I don't like getting off the couch anymore. Um, Oh, he's gonna DM on Discord.
Ooh.
His email. I think it'd be good. I'll introduce you to him, and I don't know how to give this to you though. Let me see. I'm not sharing my screen anymore, right?
Nope.
No, you're not. You're fine. But I mean, Joseph, you're right. It's like everything I would say is that it makes me interested, and that's why I've been doing my research. I think there's a lot of potential for growth in this industry. I think that yeah, maybe the SEC bothers me, but I mean, if there's a way to make it either truly DeFi or to make it so that tokens won't crash
Right.
right away. I mean, if there's a way that you can keep the prices balanced, at least for what you're purchasing versus
Yeah.
items like that, I think that would bring lot more interest into the group.
Right. No, and that's one of the reasons that I'm so excited about Mogul, because I feel like they are using blockchain, right? Like your ownership is on the
Right.
Avalanche chain. But they're hiding that enough that people like me are happy to be on the site. Um, but it is, but there, the I think Lofty could turn things around and be an amazing platform if they did a little gatekeeping around the deals themselves. And they're always like, oh well, we don't want to control it because um, we don't want it to become a security. We don't, we can't. But I think what they are missing or what they don't want to do, I don't know why they don't want to do it, but they could say, we're not controlling your business at all. But if you want to be listed on our platform, you have to have, in order to list on our platform, a DAO has to have X, Y, Z. If you do
Right.
something outside of that, you just get delisted. So I don't know. Um,
Yeah.
Alec,
yeah,
Alec, just letting you know the link was sent to your email just now.
Nice.
nice. But yeah, maybe sometime. I mean, he'd be somebody good for you to talk to. Like, uh, he's super. You'll see if he jumps in here, but very professional guy, and is like, I feel like if there's hope for Lofty, it's that a lot more people like him um, jump in and start to take charge of stuff. At the same time, I will throw him under the bus for this. He's pretty reckless with the investments that he makes in properties. Like he's bought some stuff that I'm like, wow, I'm surprised that you're an owner in that. So, but like the stuff that he runs, he does really well, and I think that is my guess is that's why there's a problem, is that he's just assuming other people are going to be as honest and professional as he is, and it's just not a very safe assumption. Hey, how you doing?
Right.
Hey, morning, Alec. Nice to meet you. Yeah, why don't you maybe quickly introduce yourself real fast then?
Yeah, sure. Well, thank you again for letting me jump on. I was trying to get more involved with some live streams, but kind of as Joe said, I'm pretty heavily involved in the lofty side of fractional real estate right now. I do have two co-ownership properties on there that I listed from my own personal portfolio, as well as I'm working on a third one right now. Should be announced pretty soon. Um, and there's, a lot of people have reached out asking about it. Hopefully, more deals to come to with the space. And I do agree with a lot of the sentiments on Lofty. I'm kind of curious to hear Joe's rationale on a bit more on why he thinks Mogul is, I guess, superior, more put together than the Lofty space. I excuse me, agree that there's more growth to do, and I'm actively trying to help the platform do that. Just given some recent events, I think there's certainly some easy, low-hanging fruit for them to just bring it to the next level. But like even since I've been on Lofty and I've been investing for probably a year and a half now, I've seen them kind of take strides forward, and I do like the unregulated nature. Um, but I think like important guardrails that exist that are not just regulation for the sake of regulation could go a long way in improving the platform, bringing on more money. Joe's brought it up multiple times on catering to the real estate investor. I'm not some huge crypto person by my background. I have some basic understanding, but I think it's when you don't need that or it's in the background, it's a nice to have rather than trying to cater to two different audiences at once. Because a lot of the crypto people that were really early in Lofty, which was not even really me, they took a huge haircut. They didn't evaluate real estate effectively. They didn't do any due diligence. They're just like, oh, that's where I put my crypto. I'm just going to throw it all into this property in Memphis or Detroit or something and hope that it does well.
Cool. I'll just Dylan is maybe saying maybe you have the wrong mic connected, but I'd rather you not try and mess with anything and then we lose you for
Yeah.
but just an FYI, yeah, maybe next time we'll play with it. We'll have more time to prepare for it next time. But
Is that any better?
oh yeah, there we
Yeah,
go.
better.
Yeah,
Oh
that's
wow,
better.
I'm sorry. I had it on the wrong one. I can repeat any of that real quick if you want, or if there's anything that you
No,
want.
it just had a little echo, but that's fine. But cool.
One other quick thing I want to add too is he did say, yeah, over the past couple of months, it did step up to manage. In total, including the co-ownership, is 50 properties. We're in markets like Memphis, Detroit. I think we got one in Kentucky, one in Alabama. There's a few in the Chicago portfolio, and then some stuff concentrated in Ohio. I think it's a lot of it's greater Cleveland area.
And Alec is the one who's making me money on that lightning strike property. So that was him. He's managing.
Yeah,
Nice.
yeah. That check should be coming today. I'm very excited. There was a scare that the insurance might not have been in place, but we did have that. And hearing from the insurance, it looks like it's probably a total loss. So there are, I mean, can't predict your property getting struck by lightning. But I mean, there are ways to make money, and I see Joe definitely doing that. My personal philosophy is I like to be a little bit more involved, have a little bit more voting share for moving things along and off in the governance system. Just to, I don't know, kind of. Sometimes when you have a single token or you have very small ownership, I feel like people don't take you seriously. So you almost need to put money in for people to take you seriously and expect you to do. Um, I guess you to show that you have money on the line, you've skin in the game. I think it's an important aspect that Lofty's still kind of finding the perfect balance on the co-ownership side, but I think they're getting there for sure.
Yeah, I mean, like the biggest thing I think they need to do is like they shouldn't just let anybody like they need to have like some sort of restrictions on who gets to manage properties, who get who's bringing stuff on. Like if every property was run by someone like you, I feel like we'd be perfectly fine, right? You, Earl, and there's a couple managers on there who it's just like they're completely transparent about everything. They're on top of the properties on a daily basis. But that's just not the standard, or it hasn't been the standard, right? And so until they can figure out how to sort of force that, I think it's just always going to be we're going to be the eBay of real estate, and and honestly maybe the Temu of real estate, or the wish.com, if they don't really like try to control things a little bit better.
I agree, and some of the stuff we're working on is actually putting something in the legal documentation for the property management agreements, where it would be an immediate violation of your property management agreement. So people may not know this, but there's a seller called Austin. He built a very, very protective property management agreement, which was smart on his part. He worked with people. He found a way to insulate himself, and now he's not very responsive. If we put in teeth into the agreement where he didn't provide his financials on a monthly basis, or he goes too long with providing it, that would be an immediate termination of that, or termination with the ability to replace him as property manager on the properties. And I think things like that could add more teeth, could allow people like myself or Earl or M1 to step up and be involved in those or like take over his management of those properties to provide that transparency. So, and I agree. I mean, we used Home River Group and Evernest. I don't think they were completely transparent about stuff too. We have properties that there was a property that had $25,000 in operating reserves, and somehow 33 grand. It went to 25,000 in September 2024 to negative 8,000 right now. I have yet to see where all that money went. I've asked Home River Group for the statements on it, for anything on it. No idea where that went. I don't know how 33 grand just disappears like that, up and disappears.
Wow.
And that's probably a property where nobody was really paying attention to that DAO.
Oh yeah.
Nobody's getting the updates regularly. And at the time, a lot of these older ones Lofty was the only go between us owners and the these third party managers, and they, sometimes they would drop the ball on a lot of stuff in between, and then a lot of times you couldn't tell, like, was it the third party manager or was it Lofty that just wasn't responding, or that was like, it's a game of telephone, right? Like, you're telling them something and then they talk to the manager, and then, okay, the staff at Lofty, they're not savvy real estate people, so maybe they don't completely understand the answer, and then they tell us back something that is also not true, or they just don't know that they're kind of being lied to or given bad info because they don't have the experience to understand that, like, there's just no way that particular repair costs that much, or all these different things, I think, have been the problems. I'd love to see them get it worked out. um but it does seem like, I mean, they've had like several waves of getting duped, but it's been like the classic, like, you know genius nerdy kids getting taken advantage of by, like, just these street smart thugs. Like, it's happened, there's at least 3 times that this has happened at scale on the platform. And so I really would love to see them get someone on their team that, like, has some instinct and business knowledge that could be like, whoa, wait a minute, like, this is, like, I mean, like, I don't know, to me, some of the ones that have come on there were just like really obvious that this guy is doing something wrong, and it takes like months for it to come out most of the time. So
So are you
Uh,
volunteering, Joe?
no, no, I don't want to jump.
you don't? You want to jump on my Hemlane subscription? You don't want to be. I mean, I agree. I think that was there. I want to say, like, I knew about Lofty back in 2021, 2022, when they were just doing their old legacy system, and I didn't want to put money in it either. I was thinking all the things right now as a real estate investor myself. This is going to be problematic. You don't know if you don't have regular updates and like proof or something to prove that's being done. How do you know the property manager's doing anything? They have no. They're getting their minimum fee. I think some of the were pretty good rates, like as far as gross rental property management fee, and like maybe it was 6%. Could be very low for the industry, but their service reflected that they had no urgency to do anything. They didn't. They only shared the bare minimum, and I agree. I think Lofty was not the greatest broker, and I'm here to say that they're moving. I think they're moving away from that. I know they're moving away from that. They're going to try and shift it more on the property managers, and we're still kind of finalizing how that's going to look. But I think that's totally going to improve not only communication and transparency, but just like where we see the actual token evaluations on the platform going forward. I mean, I don't. It's not going to be that transparently. Not going to be that on every property that I manage, even the 50 dial on. Some are just not worth it. I mean, we had a place where squatters broke in, stole the water heater, pooped and peed all over everything, and left. You're not going to win on all of them, but we're going to do whatever I can with the team I have to improve it and provide those updates. See what we can do. But some obviously I think is going to be selling is the better option, and that's what we're going to try and do, or relocate that capital to a better market, something along those lines.
Right. I think a lot of them, I mean, I think getting rid of a lot of, like, what I just refer to as trash properties, just getting them off the platform, recouping that money, putting them into ones that make sense. I think there's a lot of that has to go. Like, I mean, because it's either that or some giant project to turn it into something that's going to work. So yeah, I think that makes a lot of sense. I saw you put up Flavio's question.
Yeah, so Flavio's in the Discord. I'm not sure if he's asking, can you guys post good deals so that he can help new people, or is he saying that you guys
That
do post good
that's
deals?
what I think he's saying. He's like, post some good deals so new people can get involved. And Flavio, you are part of the problem. Do not buy properties because somebody else tells you it's a good deal. You have to do your own due diligence, really dig into everyone. um there's so many that, there's a there's a couple of people that, like, all they're doing is copying other people's trades. And some of them are, one, if you buy in after somebody else on Lofty, that price is usually moved up, right? Like, don't look at my Lofty wallet and buy what I have, because I probably bought it 50% cheaper than it is today on a lot of them. And so, yeah, I mean, I think the real thing is, if you're new, Lofty might not be the best place to invest in, because you really want to dig into, okay, let me figure out what's going on with this individual property. Because I mean, there have been some guys, there's a lot of people on there that like sound really good. They make money in real estate in real life. They bring properties to the platform. You're their exit liquidity, right? And so don't trust just some dude sitting on the internet telling you what to buy. Like, dig into those. It's a lot of work. I mean, you got to do the work. It's just like Zuber's always, it just because you're moving on to fractional from regular real estate, you still have to do the work to find those good deals. Um, it is why I'm always like talking up Mogul, because I feel like they're doing a lot of the work for you, and so their average deal is much better. But even on there, I still wouldn't just buy everything that comes on the platform. I'm digging into every single one.
Well, I say Flavio is part of the problem for other reasons, but no, Alec, maybe you can wrap it up with this. And I think one of the biggest maybe questions or concern I see a lot of people maybe digging into this fractional real estate is, what if they're not like they don't have like a tech background, or they're not really into crypto and whatnot? Like, how much do they have to know about that space to get involved in the fractional real estate side?
I'm going to specifically talk about Lofty again. I don't have much experience with Mogul or any of the others. So for me, I mean, as far as actually onboarding, like I started investing for a couple months, and then when I saw the co-ownership uh, setup, which what Lofty have, which you have someone basically backing a loan, and they're selling equity, the remaining equity that's available from the total property value minus the loan into the marketplace. So you're signing onto a leveraged property and you're getting a better return with that. So I did not have, again, a huge crypto background. All their stuff is on the Algorand blockchain, so you're able to see that. And quite honestly, that has become very handy in recent months with things going on the platform. It's really great when you can verify when someone says they did something or didn't do something. You can go back to the transaction date and see that. So I wasn't quite as involved or quite as knowledgeable in that, but I've learned as I've been on the platform after I've listed. But as far as listing onto Lofty, they've got a lot of the systems down needed to at least get existing real estate on there fairly easily, and a system down with lenders. I looked very closely into the loans I had to make sure there's no due on sale clauses or anything. And I've kind of just picked up the crypto knowledge, but again, I was looking at this from a real estate investor background. I was not looking at this as a crypto investor background, and how I did my listing, how I interacted with people to start, and that's kind of like a back of the mind thought personally, is that the whole thing is running on Algorand, and you see like certain things are USDC. If you sell some of your equity, you're not actually technically getting US dollars back. You're getting the cryptocurrency. They have built out an off ramp with Coinbase, so there's been a learning curve, for sure. But they've kind of started to get ramps in place that allow you to onboard and offboard capital more easily. Which, if you're not a crypto savvy investor, you can begin to invest on there or begin to learn. So that's how I got started. I didn't again have to have that knowledge quite as much in place. And since I've gotten on, again, they've built out more ramps to get that capital on and off. So it was a little bit difficult when I first got on, but now you can use Coinbase, which is a big one for onboarding and offboarding. That it's made it a lot easier.
All right,
And if
cool.
you're just patient, you can just use ACH. I mean, there it just takes forever. But like, you can have absolutely no crypto knowledge if you want to just use that process. It's
Sure.
not very well supported.
Or
All
credit
right.
card too. You have a
Yeah,
good
true. You can
cashback
use a
credit
credit
card.
card. Yeah.
I mean, for those that have the Robinhood Gold card, I'm still waiting on mine. You would actually make a little bit of money on each transaction if you do it right. If you buy, I think it's probably like 5 tokens, 6 tokens is the trade off. Is actually the cashback return is higher than the fee that you even pay processing. So
Huh.
something to keep in mind.
All right, cool. Well, thanks for hopping on, Alec, like this. Maybe we can get you on for a longer one, a bit of more preparation. Joseph, thanks for always doing this. Harrison, anybody last final word for wrap things up?
Just
No, I appreciate you giving us the platform.
No,
Yeah, thank you.
awesome. Yeah, we'll get you guys all back on again. This is always fun. I think a lot of people are interested in it. We're gonna do some digging into it a lot more. But like I said, check out Joseph's channel. He does more daily content on this. Let's make sure I hit 1,000 subscribers before he does, though, because he's gaining on me kind of quick. So if you haven't subscribed to my channel, subscribe to mine, but also check out Joseph's channel. So everyone, have a great weekend, and we'll see you guys in a few weeks. Okay, bye.
Thank you.